Welcome to Yes Securities, where we don't just secure investments, we secure your future. In the ever changing landscape of finance, one thing remains constant: the need for a reliable partner. At Yes Securities, we are not just wealth managers, we are architects of financial success. Our experience over the last decade has been a steady and remarkable journey leading to growth in the labyrinth of financial opportunities. We don't just find a way, we create it. We don't build walls, we build bridges that connect ambitions to achievements. Innovation is not just a word for us, it's the heartbeat of every decision we make. Your success isn't just a goal, it's our mission, our commitment to your financial journey. We provide world class solutions across multiple products, catering to institutions, high net individuals, and retail investors across sectors because your success is our business. Yes, Securities, empowering tomorrow.
Hello everyone. Welcome to FinPulse, a webinar series dedicated to exploring the technical aspects and broader discussion in finance. Our mission at Yes Securities is to make finance accessible to everyone, regardless of their background or experience. Over the past decade, we have evolved from transactional broker to a trusted advisor for both retail and institutional clients. Before we dive into today's topic, let's take a quick moment to reflect on our last session. On 12th June, we had privilege of hosting the second part of navigating fixed income securities. I hope you all found that session as enlightening as I did. Please join me in extending a warm welcome to today's esteemed speaker, Mr. Nitin Bagde, an industry expert with an impressive 25 years of experience in technical analysis. Nitin's expertise spans across commodities, equities, and derivatives, making him master of predictive and reactionary analysis. Today, we'll be discussing in detail about reversal bar patterns. And guess what? If you miss any of our sessions or want to revisit the valuable insight we shared, don't worry. We'll be uploading the entire series to YouTube under playlist named Yes Pimples, so you can catch up at your convenience. Remember, this isn't a one-way street. We want to hear from you. After Nitin's presentation, don't hesitate to ask questions and share your doubts in comment section. Your engagement is what makes this series truly special. Also, we have quizzes coming, so be alert.
Thank you very much. Thank you for coming. I appreciate you taking out time and joining me for this session. So today we will be discussing about price reversal patterns. In last few sessions, you must have heard from me that uh, for buying or selling, wait for correction, and after correction, when you see a price reversal pattern, then enter you buy or short sell. This was my general statement. Today we will be looking at what are those price reversal patterns. Now, in first session, we have our first session was about demystifying candlestick patterns. If you remember, this video is available on our channel also, and in that channel, I have discussed few reversal patterns which belongs to candlestick methodology. This time I will be discussing bar patterns, which gives us a fair idea that price is turning. Now, this is a chart of Nifty 50 cash. It is a daily chart. You must be seeing that few downwards red arrows are there and few upward green arrows are there. So what is happening basically at this point is that the the direction of price was up, and at this particular point the index has changed its direction to downward. At first green bar, it has again changed its direction to upward. So these are change of direction. down, up, down, up, down, up, down, up. Like this, it is happening. So, if we can discover in time these turning of direction or change of direction, then there is a opportunity to make money. So, what is the method through which we can discover these patterns where basically the direction is changing? Naturally, beforehand, nobody can know it, but after uh, a small time, if we are able to discover that actually the direction has changed, then we can make money out of that opportunity. So, is there any methodology which can tell us that direction is changing? Yes, there is a methodology. As I said, candles in candlestick methodology, there are reversal patterns. You must be remembering hammer or hanging man or doji. These are reversal patterns, and now we will be looking at bar patterns. So our objective is to understand price reversal pattern using bar chart. There are a few important points. Price reversal and trend reversal are two different things. Trend may reverse with price reversal, but price reversal do not always imply trend reversal. So you must be knowing what is trend. We have conducted few sessions on trend also. That whenever a index or a stock makes higher high and higher low, higher high and higher low, higher high and higher low, higher high and higher low. So this series of higher high and higher low makes a trend. But in between there are small directional changes. We can say correction also or resumption of larger trend also. But directions get changed. So these directional change can be known by using methodology of bar reversal pattern. Trend change may take long time, but price reversal basically tells us about the change of direction, not change of trend. Also, another important thing is that these bar reversal patterns work very nicely when there is a confluence of support for buying or a confluence of resistance if you are short selling. Whenever there is a confluence of support and around those support, if a price reversal take place, then its efficiency of working increases, right? Uh, so now you must be remembering that higher high and higher low makes a trend. Between inside that trend, there is again a repetitive pattern. So these repetitive patterns on the screen you must be seeing three tops and two bottoms, three bottoms. So at every bottom there must have been a price reversal pattern or a candlestick reversal pattern. At every top there must be a price reversal pattern or a candlestick reversal pattern. For example, the trend changes at this point. So first, the trend change requires breach of highest valley, then a pullback, and then again a breach of second valley. This is the second valley. When this breach happens, here actually trends get changed. But the direction change is happening here also, here also, here also, here also. These can be discovered by observing are there any price reversals occurring here. So this is the basic difference between trend reversal and price reversal. In bar patterns, there are only six types of reversals. The first is uh, island reversal. Island reversal is something like this. This is the example. In this example, I have used candlestick also, but this can be used on bar also. The basic requirement is there should be a good rally, then gap up, and consolidation, and then gap down. If these things happen, then it is called as a island reversal. it is not necessary for iron reversal to take place with too many candles. It should be more than one candle or more than one bar. At least two bars should be there. 4, 5, 6 bars can be also there, but the gaps should be there. A gap up and then gap down. This gives us that price has reversed. Trend has not reversed, price has reversed. The example is here. It is Nifty only. In Nifty, you can see a gap. A first bar went up, then second bar, and then gap down. So after this action, it was a price has reversed from here. Earlier it was rising. Now from this point, it is falling. And here some again one another pattern took place. Therefore, it is rising. So this is the example of island reversal pattern. In between, we will be flashing few quiz. I'll appreciate if you can reply on those. The next pattern is one bar reversal pattern. So one bar reversal pattern is like this. Basically, this is the first bar and this is the second bar. This second bar is making one bar reversal pattern. So this is current. I'll use word current for this one, and this is the previous bar. So current bar should have made higher high. So high greater than this high, and then it should close below. It should breach below this level, low level of the previous bar, and then also it should uh, close near the bottom. If these three things happen, the current bar makes new high, but thereafter falls below yesterday's low and closes near bottom of the bar. If these three things happen, then it is a one bar reversal. You can see here, this is the one bar reversal. This bar has made a new high above this high, then it breaches below the previous bar's low and closes near the bottom. After this reversal, the price has changed direction basically. Earlier it was rising, now it has changed direction and fallen to lower levels. So this is one bar pattern. Now the third is two bar pattern. Two bar pattern is nothing but similar size bars. The first bar should make close below near the low. How much near the low? We can say in lower half. It should make a close in lower half. The another next bar should make close in upper half, higher upper half. The size can be similar or small difference can be there, but generally similar. I'll not use word equal. I'll use word similar. So these two bars should be similar. The first one should close lower. The second one should close higher. When this happens, we can say that two bar reversal has happened. One more important thing I should mention is that in this there is also conformation part. Unless and until, for example, in one bar reversal pattern, unless and until the current bar's low is not breached, the conformation of pattern comes on breach of the low. Then only we know that the pattern has completed. So in one bar also, in two bar also, the high should be broken. So if one wants to trade, then our trade entry should be after cross of high or after cross of low in bearish case. Here is the example. Again, this is a Nifty, and you can see oh, sorry. You can see here there are two similar size. the close is in lower half. Here the closing is upper half. Its high was crossed and new bar gapped up. So we know that from this the earlier direction was coming down. Now there is a possibility that direction can change and go up. Another important thing is that many times these bar patterns fails also. It is not 100% guaranteed thing. They can fail also. So in technical analysis, there are things that can fail also. So these bar patterns also fails, but the probability of it working can be increased if these bar patterns uh, play out around some good support or confluence of support or resistance. Then only their efficiency will also increase, but many times they fail also. uh, Generally most of the time they work from I can say 70%, 80% of the time they work, but another 20-30% times they can fail also. So this is two bar reversal pattern. Now there is a three bar reversal pattern also. We call it horn pattern. Horn, this is the example, horn pattern. Basically there is a one inside bar and then is outside bar. So these 1, 2 and 3 bars make horn pattern. And after this high is crossed, then the reversal is confirmed. Here you can see this is the first bar, the second bar is inside bar, the third bar is outside bar. After the low is taken out, the index started falling. Earlier the direction was up and this direction got changed to down after this pattern. So this is 3 bar horn pattern. Recently it has came into Nifty and today only it failed also. So sometimes it will fail, but most of the time, generally speaking, it will work. The another pattern is inside bar. Inside bar, whenever occurs near uh, resistance or support, then it will work very nicely. It is basically a 2 bar pattern. The first bar is known as mother bar and second bar is known as a small bar. The important is high and low of the mother bar. If suppose at this place it has occurred and after 2 days the high is taken out, then it will indicate that the pattern has failed. But if low is taken out, then there is a probability of change of direction. So in this case of Nifty, here the low was taken out on third day and thereafter the fall started. One another like inside bar, the opposite is outside bar. In inside bar, this is the mother bar, big bar and small bar. The reverse is small bar and big bar. So this is outside. The high should be the current bar's high should be greater than previous bar. The current bar low should be lower than previous bar. When its high is taken out, it confirms that this pattern has completed and the change of direction, the probability of change of direction is very high. So this is a outside bar. The another important thing is that when I say confluence, confluence means there should be 2-3 things giving a support. Like there may be a trend line, there may be around that trend line there may be some moving average, there may be a larger degree trend line. So if 2-3 things makes a support, 2-3 tools, different tools makes a support, then that support is deemed to be a strong support. And around such support, if reversal bar pattern takes place, then then there is a very high probability that the price will change the direction. With this, I hope the examples and everything is clear, and we have completed these six different patterns. Generally, these are used. There is a if you are entering long, then you should wait for price to come down to some support. Around those support, any one of this pattern should make out, and after confirmation, the entry should be made. By doing this, you increase the probability of winning. Many a times, these patterns may fail also. Therefore, the stop loss should be, in this case, the stop loss should be at high. If you are going short, the stop loss here should be at high, entry will be at low, and stop loss will be at high. In this case, the stop loss will be at low and entry will be after cross of high. So this way you can take a short term trades, and these patterns are repetitive on every time frame. The only caution is that very short term time frame charts like 5 minutes or 15 minutes, there these patterns may go haywire, but on hourly chart or daily chart, weekly chart, they work very nicely. I hope this has helped you. This will help you. And thank you very much for taking out time and assembling here. I appreciate it. Thank you. Thank you very much.
So we'll conclude today's session. Let's apply this newfound understanding to make informed financial decisions. To all attendees, thank you very much for joining us. Let's continue this journey together. Stay informed, inspired, and empowered. Keep an eye out for next informative webinar. Until then, stay connected with us for more updates. Thank you once again for being part of Yes Fin